Hi, everyone, and thank you for joining us today for our Johns Manville IRA 25C tax credits webinar. I'm Natalie Carney, and I will be your moderator for today's presentation. Before we dive into introductions, I would like to go over a few logistics. If you have any questions or concerns throughout the webinar, you may submit them at any point during the presentation via the Q&A or chat feature at the bottom of your screen. We will address these questions live at the end of the presentation. Also, just a quick disclaimer, the information provided in this webinar is not to be used as a substitute for professional engineering design and/or documents required by building code, contract, or law. Please refer to the manufacturer's specific application guides. Additionally, we will follow the webinar today with a survey. This is your opportunity to provide us with feedback on how we did today, ask any additional questions you may have about the topic of the webinar, or suggest new topics for webinars you'd like to hear in the future. We are continuously striving to improve and evolve our webinars, so if you have any comments or suggestions as to how we can better accomplish this, or even if you feel like we missed the mark today, we'd encourage you to fill out the survey. We use your feedback to improve our webinars and provide the information that has the most value to you. Also, we are frequently asked whether or not we send out these presentations upon their conclusion. While we do not send out the presentation itself, we do post a recording of it online for you to watch at your convenience or share with your colleagues. Now with that, we'll dive into some introductions. Joining me today is J.R. Babineau and Tom Calsavera. J.R., could you start us off with an introduction and then we'll follow with Tom?
Sure, Natalie, thanks. And good afternoon and good morning, everybody, depending on where you're listening from. So my name is J.R. Babineau. I'm the research manager of building sciences here at Johns Manville. I've been with JM for 26 years, and my areas of expertise are related to building science, acoustics, building energy efficiency, and I also represent JM in a bunch of industry groups like ASTM, ASHRAE, U.S. Department of Energy, groups like that. Tom?
Hey, thanks, JR. Hello, everybody. Tom Calsavera. I'm the Senior Manager of Technical Services, been with JM for quite a long time. I'm based in Denver, Colorado also. My experience is field technical services, sales, and operations, and my industry involvement includes ResNet and the Installation Contractors Association of America. Back to you, JR.
I'd like to run through a quick overview of what we'll cover throughout today's webinar. We'll start by covering what has changed in 25C, then we'll get into incentives and requirements, followed by some retrofit examples, and finally run through some takeaways and resources. Now with that, I'll pass this over to JR.
All right, thanks, Natalie. So yeah, as Natalie teed up, we're going to start off with what has changed. So, you know, for folks that have been in the insulation industry for a while, you probably recall the 25C tax credit has been around. It's kind of been one of these things that's kind of on again, off again, right? It lapses sometimes, but the box on the left really shows what the tax credit has been for the last, I want to say at least like 15 years or so. And that was that there was a lifetime limit per taxpayer of $500. There was an annual limit of $300 for any single upgrade item. And basically that was at 10%, right, of the qualifying investment. So that could have been insulation, that could have been windows, right, a new front door. There were, you know, a number of things that qualified for the credit. But it was pretty limited, right? And a taxpayer could really only use it once, up to that $500. Big changes happened last year with the Inflation Reduction Act, and an update to the 25C tax credit was part of that. So starting this year in 2023 and through 2032, so for 10 years, the 25C tax credit has been renewed. There is no longer a lifetime limit. So that means that homeowners, taxpayers can come back every year and take advantage of this credit over and over again for the next 10 years. And then the annual limit, what we've got listed here is $1,200, and that's related to things like insulation and air sealing, windows, doors, other sort of improvements. There are some other limits for some other specific items, but we're not going to go into those in detail today. And the rate now is better as well. Now it's 30% is the the amount that can be taken off and applied towards this tax credit. So a considerable improvement and an upgrade to this tax credit. So next we're going to talk about, what are some of the more specific incentives and what requirements are attached to those incentives. So as we mentioned, insulation and air sealing is a big part of this, and that's obviously what we're going to be focusing on today. But just to give you a little flavor for what are the other qualifying items, windows and skylights are again included, again at 30%, but with a cap of $600 per year. Exterior doors are again qualifying items. So would be new heating and cooling equipment, heaters, air conditioners, furnaces, heat pumps. So are water heaters. Something that's a little bit new also, electrical system upgrades. So if you needed to upgrade your electrical panel as a homeowner, because let's say you were getting an electric vehicle, you wanted to get solar, things that might require a better electrical panel. Also energy audits, which is something new added into the tax credits. So if homeowners wanted to get a HERS rater or a home performance person to come out, do an energy audit of their home, 30% of that cost could be applied towards the tax credit with an annual cap of $150. And finally, on the slide, we can see there's other clean energy investments that also qualify. It's a whole different credit with different limits, but if someone wanted to install solar, a small wind, fuel cells, batteries, those sorts of things, those will also qualify for tax credits under the new plan. And in terms of, how efficient, how good do these things need to be for pieces of equipment, I guess I should just say items like windows and doors, furnaces, water heaters. The most kind of common metric that those items have to meet would be Energy Star. There are some other groups out there that also have efficiency requirements that sometimes come into play, related to furnaces and things like that. But in general, if items are Energy Star qualified, they will also usually qualify for the tax credits. For things like upgrading your electrical panel, that really just has to meet the National Electrical Code, and the panel, as we see here in that last bullet, has to be for greater than 200 amps. Again, the idea being we want the upgrades to be something that's aimed towards electrical vehicle charging or adding solar to a house. When it comes to insulation and air sealing, it gets a little more complicated. And basically, the efficiency requirements for insulation and air sealing are tied back to the International Energy Conservation Code, or the IECC. And that's really the model energy code for most of the country. For this year, for 2023, the requirements are that insulation and air sealing need to meet the requirements of the 2018 code. That's kind of the best understanding of how the rules are being interpreted right now. After 2023, then the insulation requirements are going to be pegged to the 2021 code. And the reason that is the way it is, and it's a little, complicated, it has to do with the language that's actually in the legislation itself. And it basically says that the insulation that you install has to be compliant to the energy code in effect 2 years prior to when you did the improvement. So, it's very wordy and it's a little complicated, but the easy way to think of it is that in 2023, make sure that any insulation upgrades would ultimately be compliant with the 2018 code. And then going forward, right, 2024 and beyond, we're going to be looking at the 2021 code. As we go farther and farther out, right, the code that we'll have to meet will always kind of be like 2 years prior, right, to when we're doing the work. So I'm sure that there will be new resources that will get updated as we move forward. But, you know, in a nutshell, as best as we can, that's kind of those guidelines. And the map on the slide, right, really shows the climate zones that the country is divided up into, that then pegs the actual insulation R values that we need. And the next slide kind of takes that to the next step. Right, so right, it really gets down to the simple question, right, that a homeowner is going to ask, you know, you guys as a contractor might ask, is how much do I need to put in, right? So depending on the climate zone is going to drive how much insulation we need. So the table that I've got on the slide right now is kind of a simplified version of that. So across the top, the columns, right, are the different parts of a house that we might do insulation upgrades to. Obviously ceilings being the most common, and Tom's going to really kind of dig into the ceiling and attic examples in a minute. But of course, right, somebody might upgrade the insulation in their walls. That could happen, especially if they're doing like a gut renovation, or if they're replacing their siding, right? That could happen there. There's a good opportunity. They might upgrade the insulation in their floors, especially if their floors are over like a crawl space, or if it might be floors, right, for a bonus room over a garage. And then finally, basements, right, would be another area, right, especially if somebody's got an older house, maybe the basement is unfinished, you know, they want to turn that into livable space. Obviously, there becomes a good opportunity to either just install insulation for the first time or upgrade it. The numbers that are in all the various cells of the table, right, those are the R values. In this slide tied to the 2021 IECC. So these are probably about as high of an R value as we would ever be looking to put in, especially in a retrofit situation. Right, and so as an example, right, of how to read this table, if I took climate zone 3, which would be like, let's say Atlanta, right, to be compliant with the 2021 code, that would look for an R49 in an attic. If it was in a framed wall, right, a wood framed wall, we'd be looking for either R20 or R13 in the wall cavity, plus R5 of foam sheathing on the outside. That's what the plus number is. If we were over a crawl space, we would be looking for R19, again, in the floor above the crawl space. And if we had a basement, right, let's say in Atlanta, right, that might be a walkout, you know, home built on a hill where you have a walkout situation. The basement there, the numbers for the basement are, the 5 would be if it's continuous insulation, like foam sheathing, right, we'd need to put R5 foam sheathing. Or if instead we were framing out the wall, and I'll dig into this more on the basement example, right, but then we would need to put R13. So those would be kind of the complying values that we would see in all of those various scenarios. Really specifically on attics, right, again, being the most common retrofit thing that we see, right, the area that's the easiest to get to in most of our homes, this kind of, what this slide really shows an example of is, you know, where most older homes are at, right? So if we were to look up in our attics, and especially if we can see the ceiling joists, right, if those are exposed, that means that we probably have insulation levels that are kind of like those left-hand 2 examples, right, R15, maybe R2021, right, but that's where the insulation is low enough that we're still going to be able to see that ceiling framing. And ideally, we're not going to be able to see that anymore once we've done our upgrades, right? So if we upgrade to R38 or R49, that's really insulation that's going to be, you know, 13 up to 18 inches deep. And of course, right, we saw on the slide for the 2021 energy code, that even sometimes called out for R60, right? And so that really translates to 20 inches of insulation. And all of these numbers, when it comes to qualifying for the tax credit, what we need is the total, right? So we don't have to install brand new R38 or R49, right? But the total needs to end up being there. And with that, I am going to hand it over to Tom, who is going to walk through how this can translate into jobs.
Thank you, JR. So I think the biggest question that's out there, we're going to take a look at warm climates and cold climates. I'm going to keep this very simple. We're going to look at the easiest place to do the retrofit, which is in the attic. And as we know, 80% of all of the energy transfer happens through the lid. So this is a great place to see a significant benefit very quickly. So if we look at a warm climate, and these are homes that were built pre-2009, and we're just going to estimate that most of these homes there have an R21. So they're going to need another R17 put in that attic to get to an R38, which again is the 2018 code. The example I'm looking at is a 1,000 square foot attic. Each one of these are going to be the same size attic. And I just went on the internet and I found out what our Climate Pro loose fill insulation is going for, which is about $75 a bag. So if the material cost, you would need about 6 inches of insulation put in, which is roughly about 7 bags. The material cost is $525. So applying that tax credit to that, that homeowner then could claim another $158 off their taxes, which really means that their effective cost for that insulation is $367. So a good place, worth making the effort for $100, almost $60 to get your attic re-insulated so you have a more comfortable house. But now if we jump over and say, okay, look, I have up to $1,200 that I could get as a tax credit. What's the best thing that I can do? Well, if you wanted to look at that, is you could go ahead and install open cell spray foam, which is roughly selling at around $2,200 a set, or we'll say $2,000 per set for this example to keep the math simple. So that tax credit would actually be $600. So for $1,400, you could get an air-sealed attic with great insulation in an older home and take advantage of the $600 credit. I mean, that's pretty fantastic. Now, if we jump over to newer attics, now the view is probably not worth the climb to maybe hire a contractor to come in. Because in this example, most homes are already at an R30. So then if you look at just putting another additional R8 in there, which is like 4 inches or 4 bags, really the tax credit is $90. So if you're in a warmer climate and you're a contractor out there looking for additional work to do retrofit work, I would focus on the older homes in your areas and do the marketing towards those folks because they really get the best tax advantage when it comes to adding to the lid. So like I do now is I'm going to jump over to the colder climates. And this is where we really see a benefit for everybody out there. So because the R values jump from an R38 in the attic to an R49. And if you're at R21 and you have to add an additional R28 to the attic, just loose fill, which is easy to do, their tax credits is $270. So their overall cost, the material is $360 to really improve the insulation of your attic. I mean, you have to add another 10 inches of insulation of the loose fill, which is about 12 bags. So this is definitely, if I was a contractor, this would be an area I would be going door to door in older neighborhoods with a brochure, letting them know that this is a great way to make a warm, comfortable home. Now, if they really wanted to go wild, again, we're taking a look at some spray foam upgrades here. Again, this is getting closer to the maximum of the $1,200 return, is that we would look at putting about $3,300 worth of insulation material cost in the attic, which is getting close to a full $1,000, $990 of credits that would go in there. That way you would probably remove all the old insulation in this case. You'd air seal, also have a vapor retarder and the insulation value in the attic plus additional Climate Pro on top of that. So this is probably the best system that you could probably put into an attic to get the biggest return on this tax credit. Again, if we jump over and we start looking at newer homes, and we're just going to look at this one with Climate Pro insulation again, that they're typically at an R38 already, so they only need an R11 to get to that R49, and that material cost would only be about $375 because they only need about 4¼ inches of insulation, which is 5 bags. And again, the tax credit's $113. Homeowner might not be too thrilled with $113 to go through all this extra effort, but at the end of the day, they have a better insulated attic and they will see the savings in their energy bills. So all of this just leads to a way to go and talk to customers about really insulating their house, adding more insulation very easily, right? Because you just get up to that attic and blow some in. And this is just a great way to take advantage of making a more comfortable house. So right now, what I'd like to do is talk about more of the retrofit areas, but I'm going to turn that over to JR and then it'll bounce back to me.
Okay, thanks very much, Tom. And yeah, you just to transition over, right? I mean, the reasons, right? The reasons why a homeowner is going to want to do an insulation and air sealing retrofit, I would say haven't changed, right? It's still going to be, right? They're still going to want this because they've got comfort issues. Most commonly, it's comfort issues, right? And kind of secondary oftentimes is also they want to be able to save money on their energy bills. So those benefits don't go away, right? The value proposition you bring as a contractor, that's still there. The tax credits are really just meant to, that's icing, right? It's gravy. It's a savings that the homeowner can realize. So to go to the basement example, right? Again, if we think about older homes, right? Those could have anywhere from no insulation at all in a basement to maybe R9, right? Newer homes might have anywhere, as we see on the slide, R11 to R19. And kind of if we look at the photo on the slide, the image on the left is really what we see a lot in most homes if they have any insulation at all. And it's this kind of wide roll fiberglass right on the foundation wall. The table, again, shows what we need to be upgrading things to. And I believe, next slide, yeah, is an example. So in this case, the example that we're using for a basement, like so let's say somebody's going to finish their basement or they just want to install some insulation. So my example house is going to have a 1,500 square foot basement, right? So a 30-foot by 50-foot house. It's going to have an 8-foot high basement wall, right? Just to make things simple. So that gives us 1,280 square feet of basement wall gross. And let's say, right, the easiest way to insulate that basement wall would be with Johns Manville's CI Max foam board sheathing product. So the nice thing about CI Max, it's a polyiso foam, so it insulates really well, and it's allowed to be left exposed. So we could literally install that board directly against the foundation wall and be done. Right, it can come in white as well as shiny. So there's a side to it with no printing, so it can look nice. But so in terms of the simplest way to get this job done, but for the square feet that we've got, that's still $2,700 of material cost if we're going to insulate it to R10, which would be the requirement. I'm going to actually jump back for a second. Right, that would be the requirement if we were like in climate zone 4, let's say, right? So that would be like Nashville or New Jersey, like the New Jersey kind of mid-Atlantic coast area, right? That would also be climate zone 4, right? So we would need to have R10, but then the tax credit for that is $810, right? So their effective cost is $1,890. Of course, there's other options that we're not going to dig into all of the permutations of that, right? But you could, if somebody were actually finishing their basement, right? So they're like the drawing on the right, where maybe they're going to frame up walls, hang drywall. Well, then we could be putting in R13 or R19 fiberglass, which would be a less costly option. Or again, kind of to Tom's examples in the attic, right? We could be doing this in closed cell spray foam and have just an awesome, air sealed and insulated basement. But again, right, we could realize pretty good savings from the tax credit for these sorts of projects. The other example that I wanted to touch on is crawl spaces, right? Especially in the Southeast and kind of middle parts of the country, right? Lots of homes are built over crawl spaces, right? Again, in older homes, if they're really old, they might not have any insulation at all. If they're not so old, they might have R13 or so. Again, newer homes might have anywhere from R13 to R30. And again, most of this product is fiberglass that's been installed up under the floor. And there's nothing wrong with that at all. But, over time, sometimes, we get photos like the one that's in the slide, right? Oftentimes, these older homes, the crawl spaces they're pretty gross. They get moisture. The insulation kind of starts taking a beating. Gravity kind of takes its toll on how well that product stays up in the floor. So, there could be a real need for upgrading these. Again, the table on the left side of the slide shows what the insulation requirements would be depending on the climate zone to qualify for the tax credit. So again, a good example would be like climate zone 4, right? So think Tennessee, the Carolinas, right? Again, lots of houses on crawl spaces in these areas. And, here, the example that I really like to highlight would be to transition away from the fiberglass and the floor system and going with a spray foam, right? Going with what's called an unvented crawl space, right? So again, looking at the same kind of example, right? The 30 by 50 foot home, this time instead of an 8 foot tall, right, wall, it's not a basement. It's just a crawl space. So if it's only a 3 foot tall wall, we're looking at just under 500 square feet of crawl space wall. And again, if we were going to install R10, this time it would be JM's Corbon 3 or 4 closed-cell spray foam, right? We'd need about 1.5 inches thick. That would be about 720 board feet or so. Now I'm defaulting to simple math because I don't really know if this would cost the full $2,000 in material for that. But again, if it costs $2,000 in materials, there's $600 of tax credit then, right? That the homeowner can get. And then of course, going back to the reasons why we retrofit, right? I mean, the tax credit is gravy on top of this, but the real benefit here is that we've got a crawl space that looks like the one in the photo where our moisture problems are gone, right? This crawl space now acts like a little short basement. It's moisture managed. It's just a far, far more durable, right, solution for the homeowner. And they get a discount on the materials used to create it and make it be that way. The last example, right, I kind of touched on this earlier on, right, would be other floors, right? So the drawing really shows like the floor in a garage, the ceiling of a garage where we have a bonus room above that, right? That's a pretty common feature in homes these days. Those rooms, which are often called bonus rooms, are notorious for being uncomfortable. They end up being, roasting hot in the summer. They're almost always super cold in the winter. They are just prime examples for an upgrade to insulation and air sealing. And the way you can do that, right, there's a lot of different ways to get at this. The drawing shows actually installing foam sheathing on the ceiling of the garage underneath that room. That would be one way to get there. Spray foam is another excellent way to air seal and insulate those floor systems, right? And again, usually, right, homeowners going to look for a contractor to do that sort of work. And again, right, they're going to be able to get 30% off all the material cost applied towards the tax credit, so long as the amount of insulation we put in, right, complies, right, kind of like with the table there on the left side of the slide to make sure we're delivering a good system in the end. Tom, I'm going to hand it back over to you for some of our takeaways today.
Oh, thank you, JR. As the contractor, you're the expert out there. So you would know how to read the code standards and know how much insulation someone needs to take advantage of this opportunity. And kind of my counsel to everybody on the phone right now, make it as easy as possible for the customer. There's an IRS form out there. It's called 5695. And if we take a look here, if we look at item 19, and it would be 19A, and it's kind of highlighted there, is basically when this form comes back out at later on this year, you would provide this form to your customer, putting in the material amount there and the savings at the bottom, as it's highlighted there, where it's kind of pointed over where it says $1,200. And you would attach your bid with the material cost on it. So making it very simple, you would walk in and say, look, this is what the material cost. Here's the foam. Here's your saving. Here's the bid that goes behind it. If you ever get it audited by the IRS, you are rock solid. And now you have a more comfortable home. So making it so easy that the homeowner cannot say no to you. You know, the thing that we like to talk about at JM is we're agnostic when it comes to insulation. We can work with you any way you want to. We have the loose fill fiberglass, we have fiberglass bats, we have mineral wool, we have polyiso sheathing, and we have all the spray foam products open and closed cell. So when you look at a system, we're not going to push one over the other. You can now offer your customer what's best for them. So right now, I just want to talk to you about a couple more resources here. We have the IRS, if you want to scan these with your phone, also Insulation Institute, and then also Insulation Contractors Association of America. They were working with the North American insulation manufacturers to put together some other tools for you to use. And I know what you're thinking, JR, there can't be anything more. Stop, this is too great.
But there is more, Tom.
No.
So just to kind of give a little teaser to everybody, right? So, right, we've been talking today about the 25C tax credits, and that's important, right? That's something that can be acted on right now. You know, that could be driving business today, right? And again, for the next 10 years. But just to kind of give everybody a little bit of a teaser, there are some additional incentives coming. They're not all fleshed out yet, but the Inflation Reduction Act included 2 other programs that are actual rebate programs, right? So the difference there being, right, the 25C tax credit, those savings a homeowner will realize next year when they file their taxes, right, for this year, right, using 2023 as the example, right, they'll get that money taken off of their tax bill. The rebates, right, are monies that they can get back right away. So the first one, the what's called the Homes Act, tied to insulation, are going to be some opportunities for rebates of up to 50% or $2,000 to $4,000 worth of rebates. I mean, so that's a lot. That's considerable. The range is in there because there's some details, you know, related to the work that's done and things like that. And kind of the rules are being defined for those. And then the second program is related to home electrification. So if somebody chooses to, you know, change their furnace to a heat pump, if they choose to change their water heater to a heat pump water heater, if they choose to change their stove to an electric range or an induction electric range, right? Those sorts of things. There are also insulation and air sealing rebates that can be attached to that. And so that bottom bullet really kind of covers the important part. It could cover anywhere from 50 to 100% of the work up to $1,600 specifically for insulation and air sealing. The caveat there is that it is an income qualified program, right? So it's targeting more low-income households. I believe these rebates can also potentially be applied, you know, to building owners that have rental units. So there's a lot of details kind of buried back into there. I will tell you right now, the Department of Energy, they just closed out accepting comments earlier this spring for these programs, and they are like actively drafting the rules basically for these 2 rebate programs. So expect that information to be coming out here over the summer, and for those monies to start being available probably late summer, early fall, right? I think it's really in every, you know, the departments of Energy's interest to get this stuff onto the street as soon as possible. I will tell you, going backwards for a second, this middle QR code is going to a website called insulationincentives.org. It's run by the North American Insulation Manufacturers Association. That is the trade group for companies that make fiberglass and mineral wool. So they have set up this website, and this is meant to be a clearinghouse for all things related to not just the 25C tax credit, but also those rebate programs once they get stood up, and they are going to be rolled out at the state level, right? So there could be also communications from your state, specific state energy offices where you are at. So with that, I think we are turning it over back to Natalie.
Thank you both. Before we get into some of the live questions, I'd like to take a few minutes to go through some additional resources we have for you guys. First and foremost, we maintain all of our informational resources on an online portal called The Source. This is where you'll have free access to our recorded webinars like this one, blogs, product documents, trainings, and tools. Also, if you don't already, I encourage you all to follow us on social. We have a Building Insulation LinkedIn page, YouTube channel, and an Insulation Intel Twitter. Finally, I'd like to highlight JM Tech Connect. The Tech Connect team is available to all JM customers online, on site, and on call. Whether you need help with installation, troubleshooting, parts and equipment, or even specifying questions, our experts are here to help. For anyone who attended today, you will receive a certificate of completion after the webinar that may be submitted for professional development hours. This will be sent to you via email and should be in your inbox by next week. Again, a recording of this webinar will be posted on The Source within the next couple of days. When it becomes live, we'll send you a link for direct access. So if you missed any part of the presentation, if you would like to view the webinar a second time, or feel the content might be relevant to a colleague, you'll be able to access it on demand online. And with that, let's take it into some questions. We've had a good bit come through. Let's see, JR and Tom, if you'd like to just take them as they come, I'm going to open these up to you guys. Let's first start with, how are the new tax credits applied for?
Oh, that would be,
take it, Tom?
yeah, really simple. So once you're filling out your taxes, and this would be in 2024, when you get to that point in the tax form where we showed you, that you would just go ahead and put that material credit right on your tax form, which takes the burden off. So let's say you owed the government $1,200. Then you would be able, and you spent $1,200 on $4,000 on insulation material, you would have a $1,200 credit. So you would apply that to that. So you would owe the government no money.
Exactly. Just to follow up with that though, it is like, to Tom's point, it's not refundable, right? So you can bring your tax liability down to zero.
Yes.
But if you had tax credits that actually got you into like, oh, now the government owes me $100 or something like that, that part they wouldn't give you back, but you could completely eliminate your tax liability potentially through these credits.
Okay, next we have, is the R value required in residential attics an average value of the entire area?
Yes, basically yes. I mean, so yeah, as we talked about earlier, that it's the final R value too, right? So that's why we can just do these top ups sometimes as well. So yeah, it would be kind of the average insulation amount for the whole thing, right? And ideally, if we're doing these upgrades, we're stapling up some new rulers and all that, so we can kind of, make sure it's a good even amount.
Okay, thank you, JR. Next we have, on a reinstallation job, how does the IRS know what R value a homeowner started with? Example, the code requires R60, the homeowner adds R30. How does the IRS know if you started with R11, R19, R30, and so forth?
They don't know. The simple answer would be that there's no way to prove that. All you would just say is that I bought my home I had a contractor come in, said that he needed to put in X amount of bags of insulation to get me to, let's say, an R60 if they wanted to go beyond the 2018 code, and that would be the end of it.
Yeah, yeah, it's exactly right. Yeah, that's one of those parts of the whole thing that's it's a little honor system, right? I mean, granted, the forms kind of ask you to put some documentation there, but yeah, they don't know. And really, honestly, right? What they care about is what you're at the end. So if you had to install R10 to get up to that final amount, or you had to install R30 to get up to that final amount, the IRS kind of doesn't care.
Yeah, they just want to make sure you get to the above.
Yes.
Code.
Yep.
Okay, it looks like we have two around labor costs. So I'll kind of read them together. One, how will a homeowner prove that they have received X in labor costs in order to receive a tax credit? And the second that kind of ties into that is, what if the contractor doesn't break out his labor material costs separately, that most contractors don't itemize their invoices?
Okay, so one, labor is not part of this. It's all materials. So the contract, if you're going to go with a contractor and you want to be able to sell this, and if you're a contractor, you're going to want to sell this, you're going to have to split out the material costs for that. That's the only way this is going to work. If you don't want to do that, then the homeowner cannot take advantage of it. And as a contractor out there, if your competition is doing this, they're going to get more business than you.
That's a good point, Tom, because I think from the guidance from the IRS is still really kind of spotty on this. And it kind of becomes, right, so if a homeowner were to do this, right, and hire somebody who doesn't break it out, it really becomes incumbent on the homeowner. They have to take their best guess, right? If they want to try to take that tax credit, they have to guess. And then, of course, they are going to assume the risk if they get audited, right?
Yeah.
Sometime in the future, then that's the homeowner that's going to have to defend them saying, well, I decided that 75% of this was material and 25% was labor, right? Or it's half and half, right? Whatever the split they apply to that, it's going to be on the homeowner to justify that, right? So yeah, to Tom's point, you're going to do your homeowner customer the most benefit if you're able to split that out for them.
Okay, next, this is when we were on the energy efficient home improvement credit slide. We have a please explain the 30% rate.
So I think that's, kind of to what we were just saying. So the 30% applies to the material cost of the upgrade, right? So, kind of like our examples, right? If, the one that's coming to mind right now is kind of the spray foam attic upgrade, right? And if the new materials that we installed cost $2,000, right? 30% of that is $600. So $600 is the amount of the credit that the homeowner gets to apply towards their tax bill. I think I got that. Tom's giving me a nod, so.
Next, we have, how does the 25C tax credit integrate with state and or local rebate programs?
So that's an excellent question, and it can be used, but what they don't let you do is double dip. So let's say in November of this year, right, rebates are in play and somebody is able to qualify for rebates. So let's say the insulation job is a total of $2,000 of materials. Well, let's just say it's just $2,000 because the rebates actually will apply against labor as well as material. So let's say the installation job was $2,000 and somebody gets a $500 rebate, right? So that leaves $1,500 like that's on them to pay for. The 30% tax credit, though, could then apply to that 15. So the material part of that 1,500. So then if of what's left of that 1,500 that's left, let's say $1,000 of that was material and 500 was labor, they could take $300, right? 30% of the 1,000, that could still then be applied towards the 25C. So they can be combined, but we just have to be careful, right, in how we combine, because the IRS doesn't want us to double dip, basically.
Okay, thanks, JR. Next we have, is an install now in May 2023 compliant to 2 years back, so the 2021 code?
Oh, I see what you're saying. So like kind of to Tom's point and how we talked earlier, right? So if you did an install now in May, you might think, oh, I need to be compliant to the 2021 code. The reason why you could do that and still just install to the 2018 code this year is because of how the 2021 code was adopted, right? So the 2021 energy code didn't really get fully adopted until later. It was like May or June of 2021, right? So it's kind of there's a bit of a little bit of weirdness with that, but that's why for this year, 2018, right?
Right. So one way to look at it is the 2018 code is the minimum. You have to install past the 2018
For this year.
For this year. But if you wanted this year to go to the 21 code, you can still do that to claim that rebate.
Absolutely. It would still, higher insulation amount is completely okay.
Right.
Okay, next we have, is duct sealing, duct insulation, and duct redesign eligible for the 25C tax credit?
That is an excellent question. I could see an argument that it would be, probably not the redesign, right? Because that would probably be more of a labor charge, but I mean, it is insulation and air sealing.
And I think we'd have to take a look at the code.
I think we would have to look. I mean, that's a really good question. I mean,
Well, air sealing's covered.
the materials for air sealing are covered.
And if the R value goes up to meet the code from where they are, that would be included.
I think you're right, Tom. I think it would, and we didn't, of course, list those R values here, but but the code does call out an R value for ductwork, especially that's like up in an attic. So I think as long as you upgraded to those levels, I bet you could qualify. I bet that would count.
Yeah, it would be for the insulation and for the material of the ceiling.
Yeah, exactly.
Those two products.
Okay, we have, when insulating a crawl space using spray foam, is it more effective to insulate to the deck or around the perimeter walls of the crawl space?
I mean, you can honestly do either. But the most common thing that I've seen when somebody's doing a crawl space upgrade like that is to do the crawl space walls. I think it's honestly, it's less insulation, less product probably versus doing the floor.
Right.
Right. Tom's nodding. So
yeah, you would look at that, but one thing you have to remember that has to have a thermal barrier placed over the top of it, and then that wouldn't be covered. If you're going to store stuff in that crawl space, okay, it has to have a thermal barrier on the exterior of that, and I don't believe that would be covered under this.
That might not be, because that's not an energy product.
And it's not air sealing because it already air seals because of the open and closed cell insulation.
We have, are there exceptions to the prescriptive R values in the code, such as physical limitations in the attic?
So, I mean, there are, and anything that's written in, any of those kind of exceptions that are written in the code would count, right? I mean, the tax credit references the building code. It specifically references the prescriptive parts of the building code, right? So the tables with the R values, but those exceptions and other things are part of the code. So I would say yes, those would still qualify. Those would come into play.
Okay, we have where do we start?
Where do we start? Now, is that coming from a contractor or a homeowner?
Yeah.
If I was a contractor, where would I start? I would get a hold of a list of all the homes in the oldest part of my neighborhood, in the neighborhood in the city. I would then go ahead and create a flyer that indicates that, you probably have insulation values that should be upgraded. There's a 30% tax credit that would be out there, and we could come in and do that for you seamlessly. We would provide you with the form to fill out for yourself along with the bid and the material cost. And we could be in to upgrade the insulation and give you a warm, comfortable, energy efficient home in less than a day. That's where I would start.
Yeah.
Now, if I was the homeowner, then I would look at finding out what the code would require to my area, find out how much was in my attic, right? Do the math to figure out how much I need. If you go to Home Depot or Lowe's, they have these little attic machines that you could blow more insulation in and then do the work yourself. And in that case, when you get your own form, and then just make sure you clip the receipt to it. Pretty simple, straightforward.
Yep.
And I did want to add to that JM has created some sales aids that would be beneficial for the contractor and homeowner. So if you guys want to reach out to your territory managers, we have flyers that you would be able to use. And then going into the next question, does the tax credit have any application to commercial industrial buildings?
So that is an excellent question. The 25C tax credit is specifically right for residential, and it's targets like, the homeowner, like you have to do it on your primary residence, right? You can't, it doesn't qualify if you want to upgrade your vacation house in the mountains or something. But there is actually an upgraded tax credit for commercial buildings too. That is called 179D. It is more complicated because it is not tied to like prescriptive R values. It is tied to modeled energy savings, right? So if you had a commercial building and you were going to do upgrades, right, to let's say the roof insulation or whatever it might be, it's pretty broad, right? If you hired an energy modeler, and there's lots of firms out there that do this sort of work, right, where they can take where your building's at today, what sort of improvements do you want to make, right? They can figure out and estimate how much energy savings you will get. Depending on the amounts of energy savings, there are absolutely tax credits for the owners of commercial buildings. So there is something out there. It's way more complicated than the 25C is. It could be its whole own other long webinar. so yes, there is something out there, but obviously we didn't cover it today.
Okay, we had one come in. Is there a way to encapsulate a crawl space without using spray foam? If not, could the rim board section be spray foamed and the rest be foam board?
The short answer is yes. You can do it without spray foam. I'm a big fan of spray foam for that because it kind of seals really nicely, but you could do it with foam boards. And again, and kind of like in that slide we had with that kind of white plastic over the dirt, that plastic then needs to go up the walls. It would be up behind the foam board, and it gets kind of attached and sealed to the crawl space wall, like once you get to basically to grade, right? So you can do it. It totally works. It takes some labor, right? You got to kind of know what you're doing, right?
Yeah, and then I would also say that you want to do some caulking. You want to make sure your air seal the rim joists.
Yep.
And that's definitely a must. And again, now that one would be less materials, but more labor.
Yeah.
And there's some engineering that goes behind there. So you need to know what you're doing.
Okay, next we have, I think this would be a good time to tie this one in. Does the insulation have to be installed by a professional to qualify for 25C?
No, it does not. You can do it yourself. You just have to make sure that you're going to the 2018 code requirements.
At least,
yes.
Okay, what is the average air sealing total in bringing an older home up to code? Packaging the insulation and air sealing could assist the homeowner gain additional money.
I don't know if that's, I'm not sure if I heard a question in there or not. Like, I would say yes, right? Bundling air sealing with insulation, 100%, right? I would say Tom and we are big fans of that, right? Whether you're getting your air sealing because you're putting in spray foam, or if you're getting your air sealing, pairing that up with fiberglass or other materials, the insulation always does a better job if it's also air sealed. And to what we've kind of mentioned, right? Those material costs will also count towards the 25C tax credit, right? We kind of, for simplicity, just show the insulation part of those. But if there was also material costs, right, for canned foam or tubes of caulk, all of that material cost counts. So absolutely.
Okay, looks like we have a few more that we have time for. May a taxpayer carry forward unused credits to another year?
No, they do not. So the maximum is 1,200 credit on the installation on this package, and it's only good for 1 year. So it's not like you can wait for 12 years or the 10 years and then claim $12,000. Sure. You got to use it. 1,200 has to be, the maximum has to be used in that year.
But to tag on to that, right? But again, if a homeowner wants to do their attic 1 year and come back and finish their basement or do their crawl space the next, that's totally okay.
Yeah,
right?
The 1,200 renews every year.
It renews every year. So yeah, they can keep going back to the well for the next 10 years. So that this is unlike past versions of 25C. This is not going to go away soon. It's something that as a contractor, right, we can, that incentive is going to be there, right? We don't have to worry about it drying up.
Well, and the best part about this, if you think about it, there's $12,000 sitting on the table. So every year you don't use it, you lose it.
Yeah, you're giving it away.
And so that would be one of the selling techniques that I would use when I'm talking to a homeowner is why just walk away from money that's sitting right in front of you?
Okay, looks like we have time for about one more before we wrap up. How can a low-income person with limited tax liability take advantage of the tax credit?
So, that's an excellent question. And obviously they still can, right? So like we had mentioned before, right, the tax credit, right, could be used to offset their tax liability down to zero, though not below. I would say, the real benefits for somebody that's in, lower income household would be these rebates that are coming, right? Though, especially the ones, the electrification one that's income qualified, there are real opportunities there for substantial rebates for work to make, homes be way more livable and affordable to operate. And of course, as we know, like lower income homes tend to be the most energy burdened when it comes to, so to be able to offset that and have a more comfortable space, the opportunity is big.
Right. And also, if you're spending all this money on heating and cooling your home, right, and you're able to stop that, in the long run, it's the best decision to make.
Yeah. It will pay. You will see financial benefits
very quickly.
Yeah, rapidly from that.
Okay, it looks like we did actually have one more question come in that I'd like to take before we wrap up. Is the rebate for a single family detached homes only, manufactured homes, condos?
The requirement is that it's got to be it's the homeowner for their primary residence. So it could be single family detached, it could be manufactured home, that's okay. Condo, I would say sure, though that's, that becomes challenging just from a logistics of how do you get in there to do that work if it's in a condo. But yes, what it does not apply to would be like a landlord, right? If it was a landlord trying to do this and he's got a building with a bunch of rental units, that's going to fall more under the 179D, right, as a commercial property. But yeah, the main thing is that it's got to be the taxpayer is the homeowner, and it's got to be for their primary residence. I hope that answered that question.
Okay, thank you very much, Tom and JR, and thank you to everyone who attended today. If you have any additional questions, please don't hesitate to reach out to us directly or via the survey that will pop up on your screen directly after the webinar. Otherwise, take care and enjoy the rest of your week.